Opendoor closed Thursday at $8.01, down 5 cents, roughly minus 0.62%, after a day spent trading relatively flat around the $8 range. On a surface level, that's a modest pullback, not a breakdown. But in context, there is still a story worth telling. We saw new signals today that reinforce the idea that Opendoor is in a transition phase, from a volatile flip-and-fly model to a more disciplined, founder-driven, product-centric platform. As we go through what's happening, keep in mind, the $8 area is acting as a psychological and technical fulcrum right now. The question is, will the company's strategic moves tilt the balance towards support holding, or will we see renewed pressure? Let's talk through the key developments, what they imply, and what to watch heading into the next sessions. Thursday's price action was tame. The stock hovered in the $8 region for most of the session, never hitting a dramatic low or high. The close at $8.01 suggests the market isn't yet fully committed to aggressive upside, but neither does it look like sellers were able to force a decisive break. In many momentum names, weeks of range-bound trading before a strong breakout are common. If the $8 level continues to hold, it could be the base from which the next run emerges. Now, the catalysts you flagged are worth layering in. First, the Rome connection. Rome is a startup building tools around assumable mortgages, enabling buyers to adopt seller mortgage terms, reducing cost friction in a high-rate environment. What adds weight to the tie is that Rome's founder, Raunak Singh, is a former Opendoor product lead. Founders today, +1. Moreover, Rome has been backed by investors tied to Opendoor, including Eric Wu. The real deal, +1. While I did not find public confirmation that Rome is integrated formally into Opendoor's product stack yet, the overlap in talent, investment, and ambition suggests latent synergy. If Opendoor were to absorb or partner deeper with Rome, it could give it a financing mortgage angle that complements the buying-selling business. That means more control over friction points in the transaction flow, a lever many real estate tech players struggle with. But until we see a formal announcement, it remains speculation. What matters for now is that the market may increasingly price in expectation of a deeper tie or integration. Second, Kaz Nejatian's ex-post, 2x at a Combinator Founders started at Opendoor this week. If you are a founder and want to help us create an ownership society, my DMs are open. That is a powerful signal. It shows the company is recruiting founders, people with ownership mindset, likely oriented toward product velocity, experimentation, and founder-level thinking. That aligns perfectly with the narrative that Opendoor wants to shift away from brute capital flipping toward an agile, product-driven platform. That post also communicates confidence and openness. It's not just a hire notice, it's a public invitation. That matters in markets that respond to narrative and optics as much as infrastructure. Third, remember the recent leadership reorganization. Opendoor named Kaz Nejatian, former Shopify COO, as CEO, with co-founders Keith Rabois and Eric Wu returning to the board. Variant Advisors, +3. Opendoor Investor, +3. RealEstateNews.com, +3. They also secured a $40 million PIPE investment from Rabois via Khosla Ventures and Wu to support growth. Opendoor Investor, +2. Foot Markets, +2. That management shift is foundational. New leader, founder DNA back in the mix, capital infusion, and a mandate to rebuild. In fact, Rabois has publicly called the company bloated, suggesting aggressive cuts and reorganization. Some commentary suggests he believes only 200 of 1,400 current employees are necessary. Note, this is unconfirmed in official filings, but reported in media. Business Insider, +1. If true, that speaks to a willingness to reset structure, align incentives, and reduce overhead, all of which the market often rewards if execution follows. Putting those together, the story becomes, Opendoor is stabilizing the stock around $8 while backing it with deeper structural moves behind the scenes. So what does this mean for the stock, and what should we watch next? 1. Does $8 continue to hold? If $8 becomes a stable base, that opens room for range expansion upward. But if sellers break it decisively on heavy volume, the narrative shifts back to risk mode. Watch volume, especially on dips. 2. Any official Rome tie or financing product announcements. If Opendoor announces a deeper integration or push around assumable mortgages, that gives real product value and differentiates it from other players. 3. Hiring announcements and product roadmap signals. If Kaz or leadership announce key hires, especially of founders, engineers, or product leads. It gives life to the founder mode narrative. Similarly, roadmaps that show vertical expansion, financing, title, repair services, etc., will be key. 4. Execution on cost structure. Rabois comments around employee counts will bear watching. If we see restructuring, layoffs, or reorganization, if painful, the question is whether the market will cheer or punish depending on how sharp, credible, and aligned the cuts are. 5. Volume behavior and sentiment flow. Watch for institutional interest, insider filings, notable moves by funds. Also monitor how the retail open army narrative evolves. These stocks often outperform when sentiment turns scorching, but vulnerability comes when sentiment peels off. In terms of posture, I'd remain bullish but cautious. The fact that the stock didn't collapse below $8 even on a slight down day is encouraging. The market is giving Opendoor grace to prove itself. But to really re-rate, it needs proof points, execution, structure, and compelling product moves. If we hit $8 support again tomorrow, that could be a buying opportunity, especially if volume backs it. From there, resistance zones near $8.80, $9.50, and $10 will be interesting to test. If one of those breaks with conviction, the narrative shift toward growth could accelerate. But if we slip below $7.80 or $7.50, the downside risks re-emerge. Let me close with this. Thursday's modest down day doesn't change the broader story. We're still in the setup phase. The $8 area is a proving ground. Behind the scenes, strategic narrative moves are happening, founder hires, leadership activism, Rome adjacency. If those threads weave into visible execution, we may look back and say this was the calm before the breakout. Thank you for watching. What do you think? Was $8 tested too hard? Do you believe the Rome linkage or the founder hiring signals are meaningful? Drop your thoughts in the comments. As always, like, share, subscribe, and I'll keep tracking these moves with you.